What's up, everyone? Thank you so much for tuning in. And if you are new, welcome to my channel, where we try to cover topics that are of interest to you on real estate and mortgages. So please make sure to like, share, and tap that bell icon so you get notified anytime I share an informative video. And of course, if you find the information provided is of value, then all I ask is to hit the subscription button to get me motivated to keep you up to date with everything real estate. Hi, my name is Preeti Rao, and I'm both a real estate broker and a mortgage broker for close to 20 years. Today, I'm here to answer the frequently asked question, how much should you put towards a down payment of a house? 5%, 10%, or 20%? I mean, anyone will turn around and say it's common sense. The more you put towards a down payment, the better off you are. But the question is, are you? So let's start with the basic difference between the down payment and a deposit. A down payment on a house is a lump sum that you use to purchase the home. It's only a portion of the total purchase price, and it often comes from your savings or a gift from family. The rest is typically covered by a lender in form of a mortgage loan. The higher the down payment, the lower the mortgage. I also want to put it out there that there is a difference between a down payment and a deposit. While they work together, they are not interchangeable. The deposit always comes first. This is the money you put up during the offer process to secure the property that you wish to buy. It acts almost like a gesture of good faith to show the seller that your offer is a serious one. A deposit is typically about 5% of the sale price, but there is no official standard amount. It is usually provided either when an offer is made or accepted, but can be given at a different agreed upon time also. The deposit will then be placed in a trust account until the deal closes. At closing, the deposit is applied towards the purchase price of the home as part of your down payment. Of course, the adage of putting a 20% down payment on a house or a condo is founded on sound financial principle. A 20% down eliminates mortgage default insurance and protection in case the housing market corrects itself. On the second hand, saving a 20% down payment on a home is a significant financial feat and could take years. And a lot can happen with the housing market during that time. So then that leaves you with the option of going less than 20%. Over the years, the rules on the percentage requirement for a down payment has changed so much, and where it stands today, it's kind of complicated. Now, technically, a bank cannot lend more than 80% of the value of the purchase price. And if they have to, which means you don't have the 20% down, then that loan has to go through the mortgage default insurance. And then they dictate the down payment terms of that particular mortgage. Actually, they dictate everything from a rigid amortization schedule to a premium percentage that they make you pay for taking the insurance in the first place. And the premium they charge eats right into the money that you are putting towards a down payment, because it gets added back onto the mortgage, making it a part of your loan amount. So where it stands today, if you are buying a home that is worth $500,000 and you are the principal owner of that home, irrespective of you being a first-time home buyer or not, you can put a minimum of 5% down, which is $25,000, towards the down payment. Easy. It gets a little messy when your purchase price is more than $500,000. For example, if your purchase price is $600,000, and of course, it's going through the default mortgage insurance, then for the amount up to $500,000, you can put 5% down. But for the balance $100,000, you have to put 10% towards the down payment, making your minimum requirement $35,000. So you get the gist, right? Purchase price $700,000, minimum requirement for $45,000 as a down payment, and so on and so forth. But there is a caveat. The default mortgage insurance stops at a purchase price of $1 million. So if you're buying a home that's $1 million plus, too bad, you have no choice. You will need 20% as a down payment. Now, let's get practical. The way the market is today, almost all homes are touching the $1 million mark. So that means a lot of buyers will need to have 20% to put towards a down payment or until the insurance changes their requirement. Major advantages though, you can avoid the default mortgage insurance altogether. So the 20% you have, the entire thing goes towards a down payment. The bank is in charge of the terms of your mortgage, but they are not limited to the amortization of 25 years like the default insurance. You can actually stretch the amortization to a maximum of 35 years. That helps with bringing down the monthly payment. Also, it increases your purchasing power. Now, not by a lot, but it definitely does help. So what is the disadvantage of a large down payment then? The biggest disadvantage? The interest rates. Since default mortgage insurance binds you so tight with so many restrictions, to make you feel better, they give you a break on the interest rate. Anyone putting less than 20% down gets a discounted rate under the umbrella of it's insured. Whereas when you put 20% down, the default insurance does not apply, and the bank is left on its own to lend you the funds, putting them in an uninsured situation, because of which the rates they charge tend to be a little bit higher than the default rates. Plus, if you go for a 30-year amortization, they use that as another excuse to jack up those rates a bit. So back to the original question, 5% down, 20% down. As a mortgage broker, I would recommend 20% down, but that does not mean you have to struggle to collect that money. As long as you have the 5% and you understand all the facets of the mortgage requirements, you might as well get into the market as soon as you can. So if you found value and you liked this video and would like to see more content, click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, and the bell icon so you don't miss any future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens the door to your dream home.